Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading, which is a London session open webinar where we take a look at the main markets. We're going to do that as we usually do, and also, of course, take a look at which levels people are looking at, what are the economic events as well that are influencing the markets. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk. As you've probably seen across many brokers in Europe, about 80% of traders lose. I think 71, I guess, is the actual level. So you need to understand that trading financial markets unfortunately is high risk. But there's a simple solution to it, and that is, in essence, just don't trade with too much leverage. A lot of people just trade with very high leverage all the time. They really think they need 500 times leverage or even 200. I'm a profitable trader since 2014, and only when I have several winning positions will my leverage be up, and my effective leverage will be actually up with about 10 times my capital. So what does that even mean? Effective leverage. It just means that, let me see if I can get a calculator. Imagine that I hold position for, say like this. Say I have 50,000 pounds in my account, 50,000, and then I open position. So if I open one mini lot, 5 mini lots of euro dollar, now that's 50,000, right? One micro lot is 1,000, one mini lot is 10,000. So 10,000 by 5, that's 50,000. So if I have 50,000 pounds in my account and I open a position for 50,000, then my leverage is 1-to-1, or effective leverage. If I open a position for 100,000, so one standard lot, then 100,000 divided by 50,000, well, that's 2. So that's the relationship. And what I do is I start out with maybe one position, then I put another one on, and if those two go good, I try to buy more of the same market, or I find something that makes sense, something that is highly correlated. As an example, over the last few months, you had sell-off in say Turkish lira, and at the same time you had some sell-offs in some European stock markets. Why? Because people are afraid that the situation in the emerging markets will cause a sell-off in European stock markets. So I was long, in my case, dollar Mexican peso, and because it was going up, and I was short the Spanish stock market because it was going down. So that's sort of the same theme. But I would only open all these positions when I already had a bit of profit in one of them. So it's not that I start with opening in a position that is 10 times bigger than my own capital. Why? Because if I do that, 1% move in the underlying market, so 1% move in the euro dollar, will equate into 10% move in my account. And 10% move in my account, well, that feeds a lot of people. So I can't do that because it would be unprofessional to lose or make that much money in one single day. So bear that in mind. Those 80% lose money is just because they trade like cowboys. They trade very, very high with very, very high leverage. It's the same if you would take a fancy sports car and drive it really, really fast at maximum speed in the old city of Rome with its small roads, or even if you would trade that, even attempt to do that in London where there's so much traffic, you will of course hit another car or hit the wall and you'll be in trouble. It's the same thing here. That's why people lose many times, the leverage part. Okay, enough preaching. Let's take a look at the markets. Euro dollar is just trading sideways between the June low and the July 31st high. And we just need to break the stalemate. When the market is just bouncing off and moving like this, there's not too much to do. There are people, of course, that are specialized on what we call range bound strategies or mean reversion, but I have found that it's a very difficult thing to do, and you just need to have a lot of patience, which I don't have time for this sort of in and out, in and out. I just like to sell on a break. For example, when the euro dollar moved lower, I sold here and then it went to my advantage for a few days, and then it bounced back up. And when it was on its way to the upside, I booked a bit of profit. I was obviously hoping for this to go down, up, and then head lower, but that didn't happen. But usually what happens is that I will be involved in a move like this, and I'm gonna be perfectly fine. I traded copper, platinum this summer, and they declined nicely. To give you an idea, here's copper, and the market, I sold it here, it went down like that, and I booked some profits here, and then I got involved, I think it was here afterwards. So I try to trade these moves and try to get good risk-reward ratio setups. It's very difficult, if not impossible, to get any of that right now in the euro. So I am patiently waiting for a break to the June low, which is 115.06. Trade below here, then we could potentially start to move to the downside. Alternatively, take out 17.52, and this could potentially go higher. Here's the pound versus the USD, and the market here is heading higher as well. Yesterday, I said that the trend was short-term bullish above the September 10th low, which is this level down here. I also said that I was not interested to trade this market. I said that if I buy here, you know, I might make 117 pip, but I might also lose 158 pip. That's not a good risk-reward ratio. I said if it goes to the downside, you could look to buy at maybe 129.92. Why? Because down here, you'll risk 95 pip, and if it goes to the upside, you make 180 pip. Now that's almost 2 times your money, which is really good. And as you can see here, the market spiked down to our buy area and now bounced to the upside. So if you did trade on the back of the idea I showed you guys yesterday, you should be up now with potentially 42 pip. And the way this is looking, I think if this goes higher, which I think it wouldn't surprise me, and when we take out that level, it will be possible to probably just put the stop loss below the low here, which means that you will effectively be risking about 33 pip and potentially make 184. If you do that, and you do that not consistently, but if you do that enough times, then that's the secret really, I guess, if you want to be profitable. Trade with the trend, get those good risk-reward ratios. Now, there's no change to this outlook. If it goes to the downside, I do think it's probably just gonna push higher. I'm not trading this directly. I think I told you guys yesterday as well that I'm trading the pound versus the New Zealand dollar. Why? Because the break to 97.80 triggered this very big ascending triangle. Some people call it right-angled triangle, and the break here to the upside really suggests that we can go up to pretty much 206. I have my take profit at 205, and I think if the market goes down, I think people will try to buy it. I think as long as it's above 97.55, I think we might go down a bit, but I think eventually, probably in a few weeks, we'll probably be higher. If we continue now, this is the price of gold. Gold unfortunately took us out for a bit of a ride yesterday. So as you might remember, I turned bearish and I said that traders are probably going to try to sell at 11.96, and this was already on the 5th of September, so that's 6-7 days ago, and the market moved against us, moved lower. And the reason why I said it took us for a ride, because you see this uptrend, we traded below the trend line and we traded below the September 4th low, which should have caused this downtrend to accelerate. Why? Because the short-term trend would have turned bearish in line with the big picture. Fortunately, though, the market did not want to do that. Now, the market has not breached the upper ends here either, so I'm not really too worried. I'm going to stick to my idea. I think the only thing we can do today is to lower the trend defining level to 1207, and I think as long as trade below this level, traders were probably quite happy to sell here. And if we trade below this level here now, hopefully that's just gonna end this little uptrend. And this is the September 11th low. Because it would be fair, I think, to assume that people that did buy here, they all have their stop losses just below here. So if we trade below that, those stop losses being tripped, and then the market should potentially just trade to the downside. If we take out this level, I suspect we could probably have a push to the upside, and I think at that point we're probably gonna potentially trade to 1235. However, though, this is not gonna be that easy as this looks like. Okay, there are probably better pairs to trade if you wanna sell dollars. The euro could probably be the better one, because if we take out this level, there will be a clean break most likely, and there's actually no really strong high until we reach 124 really. So take this out, then it should most likely open up for a push higher. Crude oil had a substantial push higher yesterday. I'm not really sure why. And the market moved all the way up, and here still needs to take out 71.42. So I wouldn't get too excited about this market. It needs to take out this level. If it does so, it could probably head to the upside. You might, though, want to not focus too much on West Texas and potentially focus on something like Brent crude. Why? Because Brent crude, as you can see here, is very close to take out this 80.49 level, and you had that bullish push as well here. And I don't think we can connect this. I mean, we can, but I wouldn't necessarily pay too much attention to it. But I suspect here that if we take out this push, this high here, we could potentially head higher as well. I think it goes well with the big picture. So this is the big picture. This is your weekly chart, and this is 2011, 12, 13, 14, 15, 16, 17, 18. And you have a big head and shoulders here. You have a head here, and you have a neckline here, like this. And if you do like this, so the market should rally with $35 from the breakout level, which suggests a target of $90.82. There's probably some short-term target here that could help to sort of get a better target, but from this perspective, if we close the week above 80.49, then the market could potentially just be starting to head higher and potentially reach that 90 level eventually. And you know what? I don't want to deviate too much, but I'm going to deviate a bit. This move here, remember this move? Big decline. There were so many people, some CEOs from big brokers as well, that were all sucked into the idea that crude oil was oversold here. And yeah, they were oversold, and the market continued to move lower again. So I know some people that bought ETFs here, and they were like, yeah, it's extremely oversold. But the market continued to be oversold. And even if they would have bought here in January 2015, they would not have been in profit until pretty much the end of last year. And now, of course, they're reaping that benefit. But imagine the financing costs of holding a position from February 2015. It would have been nice. And I think this serves as a very good story to why we should not be buying things that are collapsing. Because like in this case, it collapsed because of the production of, new shell energy, right? They could extract energy from the ground in ways they didn't were able to do before. So this moved down by a fundamental reason as well. And obviously the price did bounce back, so they're right. But you really want to hold a position for a few years just to make some money. Doesn't make sense to me. And that's why I never really buy these. And that's why I don't want to, spoil everybody or, make everybody feel bad about it. But, obviously Bitcoin is holding up quite well right now. But I think if Bitcoin trades below 5,771, I think we're going to plummet down to pretty much 3,152 because of this technical setup we have here. And you have other stuff as well, like this is Litecoin. Like Litecoin is literally bleeding, and Litecoin as well here had a similar sort of pattern. And you know what? You might be totally correct in that cryptos is gonna revolutionize the world, but it doesn't make it right to buy down here at these levels because it could be similar situation than what you're seeing in crude oil, where you literally need to wait 4 or 5 years before things bounce. Okay, so you need to bear that in mind. And yeah, let's just continue with Bitcoin, and then we're gonna take a look at the S&P. So this is Bitcoin. There's not too much action here, and it's holding up relatively well compared with a lot of the other coins. You can see Ethereum down with 8.6% today, and ADA down with 11% today. So everything literally has some significant declines, with the exception of XRP. And I think here, in the case of Bitcoin, at one point, I think the declines in all the other altcoins are probably going to spill over here. And I think at one point we'll, I'm not saying we shouldn't have to, but if we take out 5,771, I think we're going to probably head to the downside. And with brokers like Amana Capital, it is possible to sell. So it's possible to make money on Ethereum, Ripple, and Bitcoin Cash with Amana Capital to sell cryptos. What you need to bear in mind, though, is that you tend to have some significant moves over the weekend. But as I remember now, I think crypto markets are actually open over the weekend with Amana, so you should be able to exit. But if you're trading with brokers that don't offer weekend trading, then you need to bear in mind that something may happen and you could be short, but then come Monday morning and the market gap's higher, and you could get have a loss on the back of that. What's the key point, though? Well, as I said in the beginning of the presentation, just be mindful with the leverage. Okay, let's move on here, and we'll talk a bit about stock markets. We'll talk about the German DAX, and then we'll take a look at the S&P. So this is the DAX, and the DAX, traded below support here a few days ago, and I said it's possible to sell here. I think it's perfectly fine now if one sold on the back of the September, on the break here on September 5th. I think it's perfectly fine to put the stop loss pretty much at break even at the September 6th high. And then we'll see what happens. Technically, this pattern is still in play, and what you're seeing now is a test of that pattern. And I think if we push above it, well, we'll push back into the pattern, and then we'll probably squeeze higher, maybe to 12,300. And I don't want to be part of that when that happens. So I would just get out of that when that happens. And in the case of the 4 hour, to be honest with you guys, it does look like it wants to head to the upside, but this position is now break even, so it's not too much to, I think you might just let it be. And here, because we are testing that, it is perfectly fine here to sell here with stops just above the high. You will be risking about, let's say, 0.7%. If we hit the March low, could make 2.75. So 2.75 over 0.70. That's 3.9 times the risk. And if the market collapses all the way down to 11,333, then the residual risk is going to be better than 4 times. And there's not too much to do about this, again, if you are already positioned here. To give you an idea, I am short myself, or I was short the Spanish stock market. And yes, I'm still in play. So I sold, because if you look here on the daily, you can see here that the market traded below support. Similar pattern as you see in the DAX. So I sold here. The market moved to my advantage. I was up with about 4%, and then the market swung all the way back up, and my stop loss orders are pretty much up here. So if I get stopped out here, I will have lost my time, and money-wise, it would more or less be a break-even trade. I think the loss would be 0.3% on my capital or something like that. And technically here, again, there's nothing wrong with this pattern either. It's just that we're dealing with this little uptrend. And what I want to see now is the decline to that push like that. And we'll see what happens. I don't know if you saw yesterday, but I did publish a setup on the Chinese stock market. We haven't seen too much of a follow through, but this is the Chinese stock market. Not all of it, of course. It's the China A50, and this is a daily chart, and you can see how the market breached below its August low. In essence, resuming its bearish downtrend. The price is pretty much in the pattern again, but I think as long as trade below yesterday's high, that maybe this market is going to attack the downside. So I think this could potentially influence the DAX and potentially influence the Spanish stock market in a negative way. However, though, if you consult the say the S&P 500, then it's a different matter. So this is the S&P 500, and this is a daily chart, and you can see here how the market breached this level here on July 12th, which we talked about at that time as well, and I said we could head to the upside, and we're heading probably towards 3040. And here you had a corrective move, because you had that break here, and the market looks to me, to be honest, that it looks to me that it has bottomed out. We took out this level, so we stopped creating lower and lower highs, and I suspect now that this is going to be the new low. And I suspect that if the market would pull back a bit here, I do think traders will probably look to get involved. And when I sort of add everything up, if this is going to head to the upside, then probably the DAX will be stopped out of break even. We don't know for certain though. We just know that the risk reward ratio is good on the DAX short and Spanish stock market short. Whereas here, I mean, if it goes up, we'll be stopped out. There's not too much to do about that. On the other hand, if this fails and the Chinese stock market plummets, then this will just probably go down, and then the DAX bearish view and the Spanish stock market view will be very well in the money. And I think that's pretty much it. We covered what we wanted to cover. So we covered euro dollar, Bitcoin, gold, crude oil, and the DAX 30. We also covered the S&P and covered the Spanish stock market, and talked a little bit about cryptos and the pound as well. So if you guys, do you have any questions? Then just use the chat box as well. Don't forget to like the video. Just click here and hit that like button, and click here, and even better, you know, follow me on Twitter at AlexFX00. So this is the link, and please retweet and like what I publish if you like it, of course. That's my handle. Okay, so it looks like we don't have any questions, so we're gonna wrap things up. Guys, I want to thank you so much for joining, and again, don't forget to follow and like the videos, and don't forget to check out the homepage. We did have a record week last week. In the first few days of last week, we had the same amount of readers on the website like we did last month. Imagine that. So in the first 3 days, pretty much had the same amount of people that visit the website throughout all of August. The website itself is a baby. It's been around for 1 year, and we're doing quite well. But it's a new product or new service, new website. So we need all your support. So do follow us on Twitter. Do share articles that you find interesting, as we need that to sort of show that running a website like this is worthwhile. All right, guys, I think we're going to wrap things up. Thank you so much for joining me. Join me tomorrow pretty much at the same time at 9 a.m. London time here at tradecaptain.com. Have a good day. Thank you.